Ni hao ma. Happy Monday. Happy good day to be alive. Happy fun time. Welcome to Forex.Today, the YouTube channel of 14,000 foreign exchange traders stationed around the world that come together once a day to align their satellites and synchronize their watches. Good things are going to happen. Hang on, everything's in the wrong spot. Why? I can't see anything. What was I doing again? Anyways, let's go! Everything's glitchy today. I don't know what's going on glitchy. Anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good to see you. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com and the leader of our community. By leader, I mean I answer all your questions and I provide analysis to you based on what you want me to cover. Well, okay. So maybe you're the leader in either way. So today, why don't we do some, we'll look at the calendar for the week. Then we'll look at like US dollar. We'll look at euro, Japanese yen, that kind of thing. And do our rounds. Make sure you like, subscribe, and comment on the videos. And the reason you do that is simply to tell YouTube that this is quality content. Would you please go out of your way to do that? And then also, please thank Traders Way for being a sponsor of our community. And you do that by visiting tradersway.com, opening up a demo, downloading MT4, and getting to know them. Play some demo trades. You'll find the execution speed is fast. That's good. Spreads are narrow. That's good. Swaps are huge. That's also good. Let them earn your loyalty and respect. Tradersway.com. So good to see you, everybody. Happy it's not the end of the world. Non-farm payrolls. That was interesting, huh? So that was so Friday. No haircut, actually. No haircut. No haircut. No haircut. Something else is different, but I don't know what it is. Anyways. Yeah, I rented a beach house for the week, so we're heading out. And beards and beaches, I don't think mix. So anyways, got to go young and handsome. It's a new look for me. All right, cool. So anyways, non-farm payrolls is kind of interesting because I go to someone else's community. In this case, that's FX Street. And it's a 3-hour webinar. And in the first hour, I go through and I do fundamental analysis. And I say, the expected number reported by the media makes absolutely no sense whatsoever. I can't even figure out how they could possibly come up with a number like that. So why don't we go through and take a look? And I went through 3 or 4 different fundamental data points, and I analyzed them. And I said, well, there's no way in hell we're going to get -8. Like, there's... Sure enough, +2, 2.5 or whatever. So anyways, just interesting, right? This is another reason why I'm teaching you how to do the work and understand. You can't rely on anyone but yourself. And I hope you walked away with that like, you have to do it yourself. You really have to do it yourself, and you'll make better decisions. And by better decisions, I mean you'll make more money. So, anyways, I think that's interesting. And thank goodness, because when you do that in front of thousands of people, you put yourself in the potential to look silly. Morning, Maida. Right? You put yourself in a situation where you could look pretty silly. Oops. Where did it go? I have to bring it back up. Man, Windows. All right. All right, cool. So let's just take a look here. Okay. Very nice. OPEC meeting, but we already had that, didn't we? I guess, is that passed? Monday, June 8th, at 6 a.m. I guess we already had that, right? And of course, they're going to maintain cuts. I mean, hello, of course, right? So imagine that's good for oil, because that's the whole point. Oh my God, that's bad coffee. All right. So anyways, cool. So then we move on. And European financial, anyways, nothing European GDP, whatever. Aussie home loans and stuff. No, well, you know, yeah, maybe interesting. I mean, yeah, Aussie housing is interesting at a micro level. When they were the Australians were hit with a very similar situation where the Americans were previous to the 2008 crisis, where you got in the 2000s when we had our financial crisis, the dot-com crisis back then. The only place to put your money was the stock market. Sorry, it was the real estate market. You took it out of the stock market and you put it in the real estate market. And it created what we now know as a housing bubble. And Australia is sort of in a similar situation, not the same, but sort of similar, where housing prices were very expensive. And now we're trying to see if these prices are coming down to more reasonable with the economic contraction and all that kind of stuff. So I would say it's sort of it's a number that's not macro, but it's micro, but it might be interesting just to gauge on the general health of the economy. So I don't know, play around with it. You'll note, like, if you go back through the RBA statements over the last 5 years, you'll know 5 years ago they were talking about the real estate industry in Australia quite a bit, and maybe a lot less now. So it might be interesting to like follow that chain. Like if you were pretty serious about becoming an expert in the Aussie dollar, you might read the last 5 years of RBA meeting statements, right? And you'll notice that I mean, as far as like meeting minutes and statements, you know, many of them, if not all of them, are like 1 or 2 pagers, right? Like we're not talking about deep dive economic data. They're like 6-paragraph press releases, right? Like you could totally go through 5 years of them. There's not that many per year, right? So you're talking about, oh, you could probably go through, print them all in an hour, and then spend a couple more hours with a cup of coffee and a cigar sitting out on your patio reading the last 5 years of RBA statements. And now you'll be really caught up with what's going on in Australia and the RBA. And also you'll get a situation where you meet with a client and they'll ask a question and you'll say, well, you know, one day I sat down and I read 5 years of RBA statements, and you'll be a stud. They're like, you do stuff like that? And you're like, only for fun, because that's what I do at home on the weekend. I get a nice cup of coffee, I get a fabulous cigar, I sit out on the patio, and I read years and years and years of central bank statements. And you know what that says to a client? This person is unique and special, and they should either be committed for being mentally deranged, or they should manage your life savings. But like, yeah, dude, be crazy, stand out. Right? Because what are all the other traders that are doing out there begging for money? Oh, well, if you invest with me, I'll make you rich. You'll come out there and you're like, I love what I do. I'm passionate about global macroeconomics and the foreign exchange market. In fact, just for fun, I'll sit and I'll read years and years and years and years of central bank statements for fun. Some people watch reality TV shows. Some people read romance novels. I read central bank meeting minutes, and I love it. And this is why I should manage your money. You see what I'm getting? I'm going to create a monster out of you. A big teddy bear monster. All right, Chinese CPI, inflation. Yeah, big numbers. So anyways, take a look. All right, Wednesday, lots going on. OPEC, yep. CPI, yep. Fed interest rate, yep. Fed FOMC conference, yep. Is this going to be important? Yep. Okay. I don't know about CPI, like, oh, these CPI data, like nobody has inflation. So, right. So here's what I think, the Fed and many other central banks really can't do much more than they've already done. And so they're done. That's why I've been a bear on the US dollar for the last, 2.5, 3 weeks, whatever, since Powell told us that they're not going to adjust interest rates or monetary policy for a year, 2, 3, 5? I mean, this may be it. Cool. So inflation, we don't have inflation. And so does the Fed need to raise interest rates? When and why? We don't have inflation. And if they raised interest rates, what does it do? It slows down the economy. And that's the last thing they want with 13, right? With 13.3% unemployment. So anyways. Yeah, Grind says that ridiculous, sickening work ethic is the minimum requirement. You know what? Stuff like that, when I say sit down and read 5 years of RBA statements and have a cup of coffee and enjoy a cigar or whatever that you do. First of all, there's two things. One, and I haven't spoken about this in a while, but you need to train yourself, and this is an emotional training. You need to train yourself emotionally to really love what you do and reward yourself for the work that you do. But you need to mix the reward with the work, so I don't mean like, pound a bottle of tequila for, because you made 300 pips today. Okay. You're punishing yourself. What I mean is I like coffee. I like cigars. I like foreign exchange. I hate work. I have a ridiculous, sickening work ethic, but I'm an entrepreneur. I'm a conundrum. I'm a paradox. I work hard so I don't have to work, which is weird, right? But so I'm an entrepreneur, which means I'm inherently lazy. I want to find a way to do nothing right? That's what I want to do. Nothing. But of course, I work hard so that one day maybe I can do nothing. So I have to mix my work with my reward. And by the way, I've been doing this for 30 years. I mean, back when I ran startups or back when I was an investor, I worked very, very, very long hours. And I still don't see it in sort of the work ethic of people in my city. Like when I have contractors come out and place bids or, this kind of stuff, they don't have my tenacity, which is very interesting. So I've trained myself for long ago to take the things I love and to take the things I have to do, mix them together so I enjoy it. And so when when Grind says, ridiculous, sickening work ethic is the minimum requirement, and then I give the example of reading the meeting minutes, not just one, but many, many meeting minutes from the RBA, but have a cup of coffee, sit outside, get some sun on your face, enjoy a cigar. To me, that's not even work. That's not even ridiculous sickening. That's a treat along the way to you changing the world. Right? So anyways, yeah, you definitely need to be different. Okay? So, but that's a training process, that you can sit and do the work while everyone else is doing something else and reward yourself at the same time. Okay? By the way, my my mother sent me what we call my tickle trunk, my memory trunk from full of all my stuff that she's collected over my life, and she just sent the tickle trunk to me. We opened it up, and the first thing inside this trunk, my book on neuro-linguistic programming. Like, why does my mom have my NLP book? But this is a form of NLP for yourself. Like, most people don't quite understand what it is, and it sounds more interesting than it probably really is. It's a form of communication, but before you can communicate with somebody, you have to have a message. You have to communicate with yourself. You have to have a thought process, right? So before you do anything, you have to have a thought process. And I would consider, mixing RBA statements with a fine cigar and a cup of coffee out in the beautiful flowers of your yard. I'm programming myself. I'm rewiring my own brain. And I think it's very important to do this and be able to do this, or have someone teach you how to do that. And so down the road, down the path, in the course of time, once I could do other things with you, whether it's a mastermind group or I hire you or something, I'd like to take the time to be able to do things like that with you. There's no such thing as a bad Monte Cristo. Unethical. Okay? So somehow, some way, 20, 30 years ago, I learned this stuff. And it's helpful. Okay, cool. So Thursday, PPI, which is strange because it's after CPI, which is kind of interesting. And then weekly jobless claims. Okay, maybe after post NFP, people will pay more attention to that. And then of course GDP for the Brits, kind of backward looking. I don't know what we learned from that. Chinese foreign direct investments, import-export data. Okay, that'll be interesting. Okay, so besides the FOMC, which is the big one, it's a pretty quiet agenda. I know there's some big red flags on this calendar, but in the context of what we're interested in right now, they're not really that big of a deal. Yes, unethical. Any Monte Cristo will do. Monte Cristo number 2 is widely regarded as, as the best cigar. Not the best cigar in the world, or the most unique, or the most radical. It will be perfectly made. It will be beautiful. It'll be smooth. It'll be mild. Yeah. Mena says Cohiba. I love Cohiba as well. The Bayhike 56 is probably my favorite cigar. So if Maida's more of a Cohiba woman, then that's what I'd go to. Pure mathematics. I'm about to head out to a beach house for the next week. So anyways, that's why they're turned off. But don't worry, I'm bringing my screens and my laptop and everything with me. So you're just going to have to deal with the beach house. 100 megabits per second. So good enough. Should be fine. Cool. So here we are in this precarious situation because this is clearly the buy. And Wednesday, which will be about here, is the beginning of summer. Thank you, Global Investor. I didn't know that. Yeah, Joe, the white is very nice, especially with the coffee and the newspaper. Okay. Oh, hope. I've always done that. I've always done that. So my question is, on the shorter run, will we have a pullback? Now, fundamentally, I am a bear on dollar, and I will be a bear on dollar every single day of the month. But I understand a couple of things. One, I said we were likely to open out a position, rally up hard and fast. There's nothing on the chart that suggests that would happen. And likely it has to do with traders getting in all their trades before the FOMC meeting on the 10th. And because of that, they're going to rally it up and hit their targets early. Now check it out. Not only did it rally, open out a position like we had talked about, but look at the exact top. Exactly one, right? Exactly to the pip, we hit our target. So not only did I say this is a behavioral finance issue where traders want to move it and hit their targets early, like not only did it go to that direction and get to the pivot profit zone, it hit the exact price we would expect their target to have been in this situation. Thank you, Maida. So isn't that interesting, guys? It's a behavioral finance issue, not a fundamental. So now I'm wondering, what do we do? Does this continue mission? Well, that's pretty unusual. And can there be a pullback? Well, there certainly could be a pullback. So here's the thing. You're kind of on your own right now. You could take the rest of the month off and go to a beach. Or you could play with this every day. I would recommend, if you're going to work through the whole month of June, that you really day trade and intraday trade this. Oh, thank you, Maida. I see the message here. You know what? I ended up doing yard work. I've been fascinated by physical work lately, since I've been doing so much intellectual work. So much. But I'm a good old Canadian boy, right? So I don't mind getting dirty and sweating and all that kind of stuff. So I've just been working hard in the yard. Nothing inspirational going on except me just doing stuff. But I'm almost done one of my textbooks, and I'll probably finish the second textbook while on vacation. And school starts in 2 weeks. So by the time school starts, I will be fully done 2 of the textbooks, which means I'll be able to bust out those A's. And by the way, it's hard to graduate with honors in grad school, and so I'm on track to doing that. So looking forward to that. So I'm going to put in the extra effort, as always. So anyways, I'm wondering about this. I'm just wondering, like, I don't know But what I've taught you is, take what's expected, and then when that is done, see as everything after what is expected as a form of risk. So this and this we talked about, we got exactly what we thought, and the timing of it is exact. Okay, but, right? So anyways, now we're between the Wednesdays, and I'm not saying this is going to happen, but if it did, I would understand it. But it doesn't change anything for me. But I understand why. It's simply maybe the turn for the bears, the bearish turn. Batman, I'm not bright, but I am a hard worker. Okay? Cool. So, yeah, so exotics. Yeah, we can look at exotics, which would be anti-sell, sell, sell. Like if the dollar's strong, then that's going to be bad for exotics. Okay. But somebody brought up exotics. It caught my eye there. But I want to make that point. If the US dollar gets strong, all these exotics are going to get crushed. Okay. When a foreign country, especially an emerging market, has to pay more dollars for their dollar denominated debt, it actually makes them more poor. It drops disposable income. It drops consumption. It drops the household wealth effect. Okay. So it's like you're poor because you have a loan, but then your loan gets more expensive every month, so you actually become more poor, but you don't get anything more for the money you're spending on your loan because you already spent your loan. Right? You see what I mean? Oh, right on. Meta, that's really cool. I mean, that's what a community is about. Okay, so anyways, I look at this right now, danger zone. If it did this in the future, okay, fine, I might be into that, but I'm not into that now. And I think there's lots of vulnerability with a lot of these moves, but you know, follow along kind of thing. So USD, you probably want to stay from the dollar pairs. If dollar gets strong, it'll bring the euro down, which means maybe your euro rand and euro lira will do better because of a weaker euro. So that's kind of, you have to think through it a little bit. Daniel, the answer to your question has to depend on who you mean by you. Okay? So let me answer your question with a question. What happens when the Fed cuts interest rates? What happens to the dollar? Okay? All right. Is Australia, is the Australian dollar, the Kiwi dollar, the euro, the pound, and the CAD, are they reserve currencies? Then they do not behave like the US dollar does in that situation. So the best thing you could do, okay, Daniel, is find, I don't know, like look at the New Zealand dollar. Go to the the Reserve Bank of New Zealand website. Find out the last cycle of cuts, or maybe every cycle. You could go back as far as you want. Every time New Zealand cuts interest rates, right? Find the dates and then pull up your chart and say, look at a chart of like Kiwi dollar or Kiwi something, Kiwi yen, whatever. and look at it and see if you can find a pattern over the course of years of when they cut, what happens to the value relative to other currencies. When they raise interest rates, what happens to the New Zealand dollar relative to other currencies. And like, don't take an answer from me. Don't take an answer from a book. Don't take an answer from a dude on TV. Just put in that work. It's not hard to find those dates, and it's not, you already have access to the charts. So you should just do the work yourself and say, well, I've done the work and this is what I've seen. Okay? Because I tell you, there are things that I learned at Harvard that are wrong. So I can't say, well, that's what they taught me at Harvard. I've argued with professors over the real world and their textbooks. They've never seen the real world, and I'm only now just reading in their textbooks because they forced me. But I remember specific things related to gold that I got marked wrong on exams. And I went back and I'm like, dude, I've been doing this for 20 years. I ain't wrong. And he's like, well, I'm your professor and I ain't wrong. So I got, my grade went down and he was right. But so you can't rely on anyone's analysis. You can't say, this is, everybody knows gold's anti-dollar. Well, okay, we'll start with that, but don't believe everything you hear either, right? So go through and easily answer that question. What happens to those currencies when those central banks cut interest rates or raise interest rates? And take a look, and now you'll know for sure. Okay? I got a question here. How will the market going to react to this year's summer holidays? First of all, this year is nothing unique. Many years we've had holidays. So why don't you look at every summer for the last 25 years and answer that question yourself. Okay? I mean, you could start by what happened last year, last summer. Okay? So anyways, let's get off exotics. Okay. Cool. So anyways, that's where we currently are. So dropping into a smaller time frame instead of monthly, what I recommend really until September is rely a little bit on monthlies, more on weeklies, and pay attention to dailies. Okay. Well, I know you say thank you. I know you're not really happy with my answer, but that's an easy. Like, don't ask me questions like that. I mean, you can, but dude, it's so easy. What happened last summer? You can answer that question yourself. Okay. And by the way, let me reference it this way. What I hear almost always, okay, the common knowledge is, and by the way, I'm trying to make you the top 5%. I'm trying to make you uncommon. But the common knowledge is you can't trade during the winter holidays and you can't trade during the summer holidays. That's what 95% of people believe. And of course, that's nonsense. It's actually true in their case, they can't. They can't because they don't know how to trade anyways. So don't listen to them. Okay? So I'm going to trade with you all summer, and I will show you. Jaime says more activity if people can't travel. Well, let me remind you the date I gave last Thursday. American Airlines has increased their daily flight schedule by 75%. Then if you look at non-farm payrolls, we added 2.5 million jobs last month. Much of it, if you look at the data, had to do with the travel industry. Airlines, hotels, so on and so forth. Right? So, I don't know. I mean, Jaime, I know what you're saying. I don't know if I agree with it. Like, I don't disagree with it, but I think we're adding jobs back pretty quickly. Now, the interesting thing in the data, and you could look this up at the Bureau of Labor Statistics, the people getting their jobs back are the furloughed waitresses. They're the maids at Marriott, right? They're the low-skilled, low-paid jobs that were lost right at the beginning. Now, most, higher educated people that had more professional white-collar jobs, they maintained their jobs. They just worked from home. But they never got furloughed. They never got laid off. They work from home. Okay. Now, what's interesting, if you look at, because obviously we added 2.5 million jobs, but we also, more people continued to lose their job. The roles have switched. The people that are still being slowly laid off are the white collar workers. And the people are getting hired back as fast as possible are the lower skilled blue collar jobs. So they're getting hired back in construction. They're getting hired back at the hotel. They're getting hired back at restaurants. They're getting, that kind of stuff. And the slow layoffs, which were the white collar ones, are continuing. That hasn't changed. And going out maybe 6 months from now, look, you might get your job back at Applebee's because people are eating at Applebee's again. So now you're the assistant manager at Applebee's and you got something to do. Now, the higher skilled jobs are kind of interesting because when we look at GDP, and we've done GDP a lot lately, right? GDP equals C plus I plus G plus X minus M. Okay. We've been focused on consumption a lot. And that means consumption went down when restaurants closed. Now restaurants are opening and people are going back to the restaurant to buy food because they miss their favorite food. But, right, and this also means an increase in employment because the dishwashers and the waitresses and the bartenders and the assistant managers, they all have to get their jobs back. So consumption goes up and jobs go up and all this kind of stuff. And so all the blue collar workers get hired back immediately. Now the next thing is the I part. Okay? If a business, a professional business, is negatively affected by the general economy, it may have to do with a decrease in business investment. So I'm thinking like, if you were an engineer at General Electric, but the nuclear power plant has been on hold for 5 years due to COVID-19, okay, there's going to be a problem there, right? Or businesses that had already invested into hardware and software to allow for remote workers, let's say they did that 3 years ago, no new investment might come in. So you have to look at like, are businesses going to invest? Because when a business invests in something, so business number one decides to actually build their infrastructure for remote employees, they're going to hire a consulting firm, and the consulting firm is going to hire the hardware and make their own software and come back to here, which means if they make this investment, this consulting firm then hires consultants, right? And then the consultants guys buy the hardware and hire the software programmers. So now if they're buying hardware, so now the factories have to make the orders, and so now they're in business again, and so on and so forth. We got to get this kind of cycle going, but we know I is very low right now and has been low, but maybe COVID-19 opens the doors for spending like on infrastructure to allow for remote workers, because like in the finance industry, 6 months ago, there was no way in hell you're going to work at home if you worked at a bank, okay, or a wealth management firm, because they would cite, you know, the first thing it would cite is, oh, the security and all of this and all of that, and they would just tell you it can't be done. Now that entire industry is remote, so they're like, oh, make this happen big time. And if they do that, then I goes up, and then the white collar employment. So think of it this way, right? C produces blue collar jobs, right? And I produces white collar jobs. Okay, and now this can go into what's called, I think it's this way, no, the COLA report. So you could look at COLA, I think it is, COLA report, and what this study does, or the COLA study, it looks at jobs posted versus workers available. Okay, and typically what you do is you look to see in the study, you want to see a good overlap, you know, like you have the right workers to get jobs and the right jobs to hire workers. And right now, I think there's a split, right? And so, right? So anyways, we'll have to pay attention to see. Six months from now, I think most of the workers will have their jobs back, but those will be the lower paid workers. And I think we might have 5% unemployment just for white collar workers as we wait for investment to pick up, because investment in GDP has been lagging for several years. Anyways. All right, so I want to see a weak dollar. So we got OPEC. We already knew. I already talked about it last week. That was going to produce strong Canadian dollar. We already have a weak U.S. dollar. I have this written out, 135.000000000, and now it's been down, up, down, up, down. Very cool. So we were here, non-farm payrolls came out, and up and down and up and down and up and down and up and down and gone. Cool. And probably up and down. Right? So that's pretty cool. And this has to do with OPEC. OPEC cuts. Yeah, you know, maybe it's a Harvard thing, but it was something we studied. And funny is, COLA is Kids Online America, which was a startup of a friend of mine. Actually, we sat on a board, I think, back in the 90s, and he started that, and it was like AOL for kids. And so I got that stuck in my Harvard COLA employment study statistics. No COLA, MBA student statistics, HBA. Oh, by the way, I got accepted into a new cohort, this time at Harvard Business School. So I'm going to bang out some research at HBS starting in October. COLA employment. Coca-Cola. Yeah, thank you. Cola employment research. See, it's not cola. It keeps pulling up Coca-Cola. So I will be, in this cohort, we'll be doing research on alternative investment strategies. And when we're done, I'm going to teach you everything they taught me. The thing is, I already know everything they're going to teach me, but I'm doing it so I can get the piece of paper. Strengthens up my master's degree. Plus, I get to wear the Harvard Business School sweatshirt and stuff like that. And I could just see some dude coming up, "Hey man, did you get your MBA at HBS?" I'm like, "No, I had my MBA before I went to HBS." And I just can't wait to drop it. Dude, did you get your MBA at Harvard Business School? No. I already had my MBA before I went to Harvard Business School. It's just like, oh man, I'm going to practice and practice. I'm just going to sip my drink and walk away. Can't go too far for a good joke. All right, so yeah, employment. This ain't here, right? So anyways, it's something, I'll have to look at it, see if I still, I'm not spelling it right, obviously. And apparently it's not publicly common data. So anyways, I'll find it. I'll find it someday for you. Sorry, I'm tired. And Gary, right? Yeah. Like, dude, did you get your MBA from Harvard Business School? No, but I follow them on Twitter. Yeah, no, thank you, Joe. It's out there. And I can tell you what it looks like. Okay, and you know what? All right, so I was taught the Kohler report by my professor who at the time is and probably still is a senior economist at the Fed at Boston. Maybe it's an internal Fed thing. Maybe it's just something the Fed does. So anyways, I'll tell you what it looks like. Okay, typically you have this data points of jobs available, and I forget what this is and that is, but I remember this. These are the jobs that are available, and then this study is the data set of workers available, and you're looking at the ability to match the workers with the job, right? And typically you're looking at, let's say, how would you measure this? You'd use like a linear regression and say, okay, they're all within one standard deviation of a mean. And you're like, okay, there's a pretty good matching, right? But then more recently, so I can't get rid of those pinks, so let me do another one. The jobs available now look like this. So these are the jobs being advertised, the data points, right? Just the types of jobs. And how, I forget the Y and X axes, but let's say now yellowish is the jobs, the workers available. The workers available haven't changed, okay? And for some reason, most people say, well, I'm 38 years old. I have 3 kids, one of which is only 3 years old. So I have a 3-year-old, 5-year-old, and an 8-year-old. And I've lost my job and I can't find a new job. So they say, I'm out. They hang around, they look for a job for 12 weeks, 16 weeks. They lose their unemployment benefits, and for some reason, they can't do anything about it. Because this job available is to become an artificial intelligence engineer. Okay. So my friend last year, she was in a situation where she was, notice the she as well. She was 46, had 2 kids that were probably 3 and 8. And for 2 years, so since she was 44, took artificial intelligence engineering classes at Stanford at night. And after 2 years of doing calculus and machine learning and statistics, graduated Stanford with a certificate. And 1 day later, was hired by Apple. Okay? And she got the job. Most people don't do that and say, well, I can't do that. And they stay out and they drift out of the employment. So what we were studying at the, using this Fed data was, looking at suddenly 2 trend lines. The trend in jobs available, the trend in workers available, and the dichotomy between the 2. And what it's saying is you got to hire and retrain these people. And I'm like, you totally can. You can go to edX and become an artificial intelligence engineer in less than 4 years and get a really good job, high paying at a high-end company. But people don't do it. And of course, from my point of view, I'm learning that someone in his mid-40s had spent 5 years in education. I'm like, you totally can do it. Right? And you go to a site like Udemy or edX, you can get a college degree for free. I mean, I guess if you need the statistic, you probably have to pay $100 a year, right? And in less than 4 years, have a college degree. Or in less than 2 years, have a master's degree, and it'll cost you less than $500. But still, people don't do it, which is a shame. Okay, so the COLA is like, okay, when jobs come back, it's like, when do these jobs sort of align up with our economy? Because let's say, so I think we had 24 million people unemployed. Now we're down to 15 million people unemployed, and eventually we'll be down to like 5 million people unemployed. But what if this move from almost 25 to 5. So if the 20 million people that got hired, if they're all waitresses, and now we have 5 million people unemployed that are professionals that are used to making $200,000 a year, this will be sort of odd where we're near full employment again, but still in a recession. Because the waitress doesn't own her house, but the young white collar, right, family. So in the San Francisco Bay Area, you get a young couple sharing a loft. The 2 of them together make $350,000 a year, and they're dead poor. They're dead broke. And they're like, maybe when we're 40, we'll get kids. But it'll be interesting what'll happen if the shift of COVID-19 over the course of time shifts up to the white collar, because before it was primarily blue collar, right? So it might be very interesting how this all plays out. right? And Blue Boy says that you stop counting people that stop looking for work. It's true, but there are weird rules. So if you go to the unemployment office and you need the unemployment money, and you say to them, well, I'm not doing anything and I can't find a job because it's not that I'm looking, it's that everything's shut down with COVID-19. I would like to take this opportunity to go back to school and get some new skills so that maybe I can work at Applebee's as the assistant manager instead of the waitress. And they'll say, well, that sounds really good, except if you do that, you will lose your unemployment benefits. So they keep you poor. Isn't that horrible? Yeah, sucks, right? That's why you got to take care of yourself. All right. So, what's the current trend? On this time frame, it says up. So here's Monday, here's Monday, here's Monday, and here's Monday. Okay? Every Monday, it's gone up. The difference, though, is that this is a buying pivot, this is a buying pivot, this is a buying pivot, and this is a buying pivot. So this is OOP and higher risk. Now, it's not dropping off the M3 either. So this has got to be a delicate one, a delicate trade. And I think you're going to run into a lot of delicate trades coming up. Okay? So I would stop using the bigger pivots. And most of these, we've already hit the targets. They're done. Right? We're done. Like, where were you a week ago when we talked about all of this and planned it all out? So now we're done. So now I don't know. The low-hanging fruit's been plucked and eaten. Okay? So now it's a little dangerous, and I don't know if the gorilla's coming back. I don't know if I'm going to fall out of the tree. I can get hurt. So here we are. This is not a good place to buy, and yet it's not bearish. So I would look for profit taking like I showed you on euro dollar, and I look at it as profit taking, right? And I would look at it this way, okay? And pay attention to this line and say, is this providing meaningful information to anticipate a rollover? Do you understand that? So one way of doing that is then go back to the 4 hour. I have to show you the context first. And say, when was the last time we had a meaningful higher high? Meaningful higher high. Right? 1, 2, 3, 4, 5, 6. Right? Almost 24 hours. Okay? So now you got to say, well, if it's not going higher, it's not necessarily bullish, right? But it's also not going lower either. So now you got to play the opposite, an equal side of that equation. Where's the lowest lows? And we got some sort of thing going on in here. So what if over the course of time, I decided I don't need to be aggressive because the easy fruit has already been picked. And you're the one that picked the fruit. Okay? So now you're looking for a series of lower lows and lower highs. That might be more interesting. And that's not a fundamentally based move. I think that's people making their money and people taking their money out and going on vacation. We got the big risk event on Wednesday. So what a good time to take some profit and go away. Okay. You see where I'm getting? So another way to skin this rabbit is you can say, well, what about this? Okay. Down, up, down, up, down. Okay. I will remind you while you're thinking about this, I am a bear on US dollar. So I'm not talking about a fundamental decision here. Okay? I am not bullish the US dollar. But I've been talking down the US dollar for what, 4 weeks straight now? We seem to be, or at least I predicted a week ago, that right about now we would be hitting our exit zones and just not being in the market anymore. So if I'm leaving the market, there's nothing holding the market back up until I come back. See, that's why I act as boss. I'm in until I don't want to be in, and then I'm out and it falls without me. And then when I come back, I am pushing this back up again. Why? Because I'm the boss. And so now I'm just looking at this and then back into that. It's just a timing issue. Nothing more, nothing less. Nothing fundamental has changed. Okay? Okay? Now to daily, and I can't zoom in any more than that. Typically you trade between the candles, so there's an up and a down and an up and a down and an up and a down and an up and a down, an up and a down and an up, and then it gapped down and went straight up. It's not quite the same scenario, but if it makes a higher high today, I can buy the higher low tomorrow, just like the previous million candles. Okay? Cool. Well, I just hit the hour mark. You know what? I'm going to call it a day. Thank you for being a member of the Forex.Today community on YouTube. Please click like. Please subscribe. Please leave a comment on the recorded videos. All of this tells YouTube this is quality content. And please visit tradersway.com and give them the opportunity to earn your loyalty and respect. They want you to succeed, but they also want to be your broker. Please give them an opportunity, win you over. tradersway.com. Thank you, everybody. I'll see you from the beach tomorrow. Fingers crossed it'll work. There's always uncertainty on the road, so I will see you tomorrow. Peace on earth. May the pips be with you. May